Hey there, folks. Welcome to Sunday Night Stock Market Futures Live. This is Bob Desmond over at the Contrarian Trader. And happy almost 2020. Uh, it's amazing how quickly this year went by. And I was talking to a business partner of mine earlier today. And hey, Blockchain, Happy New Year, brother. Good to see you. Got your messages earlier. Thank you. Calden, how are you, sir? Sunday Night Live. I know the acronym. I'm getting used to you. It's good to have everybody here. RL, I knew you were already on here before I went live because you're the only one that hits like before I go live, which is outstanding. It's your signature. Don't ever go change it. So I was going through a conversation about the year that was being 2019 with a business partner of mine, and he says, think about all the changes that took place over the past year. I said, yeah, we did the website launch. It's still not 100%, not what we want. The SMS alerts will be fixed. I've been guaranteed, assured by the beginning of the year, by the first of the year. We'll see what happens. Hopefully, fingers crossed that works out. We're trying a new provider. But otherwise, we did launch. It was our plan to launch the website in January of 2019. We launched it. It worked out. We're still working out the bugs. Hey, Eric, good to see you. Happy Sunday. Happy almost 2020. And he asked what the game plan was for 2020, and I said I think we already began it. And when he looked at me like he did a double take, I said, well, think about the live streams. Think about what we've begun to do with our viewers. We've begun to develop a relationship and engage with them. And we have the public forum where we're getting to know people that aren't members, but they're great people. I get to know them, and maybe they don't need us. Maybe they just want a community to hang out in and chat. And if they can help us and we can help them, great. But you have others out there that benefit from the members' inner circle, and that's really proven to be a big hit. And while it began in 2019, we're going to continue that wholeheartedly, probably more sessions moving forward into 2020. And in 2 words, I'll sum up what 2020 will be. What was 2019 was not live, was technological advancement. And in 2020, it's going to be, in 2 words, live engagement, a lot more engagement. So I'm looking forward to it, and I love doing these. So thanks for being here. I really do appreciate it. Without you, I have nothing. All right. So what are we going to go over tonight? Not much on the headlines per se. We do have news out of China that, for the most part, they launched a new QE program there. And the odd part is that they have inflation that is ripping through the ceiling. Here is China's food inflation ripping higher, and they're cutting rates. Similar to what we're doing here, but they have inflation that's really becoming out of control. And when you measure their CPI, the consumer price index, versus their PPI, the producer price index, you can see that the consumer isn't feeling it as much. Their businesses are absorbing a lot of that inflation, but how much longer that's going to be able to hold up, I don't know. And I guess it all depends upon how the government lets these producers continue to raise rates. I think that the Chinese Communist Party, their biggest fear in the world, are having mobs in the streets. So I doubt wholeheartedly that they'll allow too much inflation to creep through from the producer level if they can avoid it. But pork, soybeans, prices are going through the roof. They opened up the spigots in terms of importing U.S. soybeans, and they're saying that's a concession to the trade talks. But frankly, the Chinese Communist Party, they just want to keep control. And if you don't have protein to feed your people, they're going to have a major problem over there. So, in short, you have the Chinese, which are cutting rates. and stoking the flames of inflation even further. And it's coming to a theater near you in the United States. So, interesting setup there. Yeah, Eric, you're right. Pretty bad. I wanted to talk a bit about Bitcoin, and it kind of piggybacks on inflation due to the fact I did, I forget whether it was on a Thursday night or a Sunday night, but maybe it was last Sunday. I did a correlation of inflation and Bitcoin. I showed how they are correlated. And Bitcoin today, because it's open right now, broke out. It recaptured a support level. We're off the highs of the session, but we recaptured the 72.50 mark. Actually, I shouldn't even say that. What was the high here? Let's call it 73.75. We recaptured that support level. It is currently holding. Watch for consolidation here. These Stokes and RSI are very, very ominous. You're seeing higher lows. No breakout yet on RSI, but we're very, very close. Stokes hooking up. You have higher lows here. So I think that we are going to continue to see upward pressure on Bitcoin. Here's that monthly chart versus CPI. CPI is in dashed gray line here. And the CPI continues to press higher. That's a consumer price index here in the United States. Yet, Bitcoin has not broken out yet. I think that this is a pretty ominous setup. And we are long of Bitcoin. We are bull flagging out here. And I think that we're going to break out in early 2020 on Bitcoin. And we're going to play catch up with the CPI. And you can see going back to, what year was this? Let's update this. 2014. How the CPI and Bitcoin are very closely correlated. And when you take a look up here, you can see that anytime that this line is above the zero level, it shows this correlation. Right now, not right now, earlier in the year, you saw a divergence, but now you're beginning to see the two trade in tandem. It's just not reflected yet all too much on a monthly basis. So look for a breakout here on Bitcoin fairly soon. Now, on a weekly view, Bitcoin, we're consolidating very, very nicely here. And this is as of today. Higher lows on Stokes. Bitcoin looking very interesting. Very, very interesting. Oh, I didn't mention 7 p.m. tonight. We're going to be going over we're going to be doing a members intergroup circle. And that goes for titanium members, gold members, silver members. So you're all invited. I'll send out a link immediately following this live stream. And let's go to the stock market futures. What a mess here. Okay, let's drill down. We'll go to a 4-hour view. And I mentioned on best stock charts, this is the S&P 500, the E-minis, we're up slightly. I mentioned that we began shorting the market last week. Now, it wasn't with reckless abandon. I'll be looking for a break here. You started to see a break on the S&P 500 on Friday. Here, as we broke down below this lower band of support. And we'll probably try to rally back, try to recapture this red line here. What was support will now act as resistance. Maybe it'll recapture it. Maybe it'll be proven wrong. I was too early. Who knows? All right? So we don't want to go aggressively shorting this market until such time as we begin to break down. Now, Blockchain, who's on right now, sent me a message earlier. And he said, Bob, I thought you were talking about the markets rallying into the election. And I stand by that. I do believe that they will rally into the election. And I think that that rally will be fueled by the Federal Reserve. That doesn't mean, though, that we will not experience a correction prior to the election. I think that early in 2020, we are going to get a correction. We have come a long way on thin volume. This market's very expensive. Nobody's really forecasting a big earnings explosion anytime soon. So the charts are indicating that the markets are extended. The daily chart of the Russell 2000 was very, very bearish on Friday with an outside reversal day. Let's bring up the Russell right now. And those who are not familiar with an outside reversal day, it's also called a bearish engulfing. And that's when the down day engulfs the prior up day's move, meaning takes out the highs, takes out the lows. In fact, I'll even illustrate for you what I mean. Let's go to a daily chart. And here you have it. This was Thursday. Here was Friday. No new daily low yet. Let's go to the 4-hour chart. So it looks as though we are a bit higher this evening, but the markets will tell us tomorrow morning whether or not what we're seeing right now is a sustainable, quote-unquote, rally. It's early on. We're only a few minutes into the session. Or will we break down to new lower lows? I will point out, though, that on this 4-hour chart, we did close just off of the third standard deviation Bollinger Band. So we may limp up higher here and do similar to what I expect on the S&P 500, meaning we will rally up and into what was the prior lower band of support that will now become the upper band of resistance. So not entirely out of the question. If they do limp it back up on very, very light volume up and into this now resistance level, we will entertain leaning into the short side of the Russell 2000 as well as the S&P 500 into the new year. I'm not predicting a market crash yet. I think the Federal Reserve will prevent that in the short term, but longer term, this market has some serious problems on its hand. Moving on to, let's go to the dollar. The dollar got killed last week. And we are down again. The 96 handle is a psychological level. I mean, actually, I should say the 97 level. Not holding the 97 level is a psychological level. You want to see a rally up and through that 97 level if you're a bull. I don't think it's going to happen. I think that the dollar is in a lot of trouble here. The weekly charts are telling us that. The daily charts are telling us that. Sunday Night Futures Live is telling us that. We are threatening to break down to new lower lows. We may have, on a 4-hour chart, the makings of a double bottom setup here on RSI. Perhaps we'll get a short covering rally here at some point in time. But the higher level view of the dollar on a weekly basis in particular is not looking good. This is a fairly bearish chart. So I suspect that with the weaker US dollar, where's my gold? Gold should have a bias to the upside, but we were overbought last week. And we are coming off a little bit off of that overbought condition. Take note of RSI, how overbought it was. And I mentioned on Thursday night, Stock Market Futures Live, we were overbought relative to the third standard deviation Bollinger Band on not just gold, but also on the gold miners, whether it be NUGT, whether it be the junior miners, whether it be the senior miners. It doesn't matter. They were all overbought relative to their third standard deviation Bollinger Bands. We expected a pullback. We hedged. We opened up a short position to protect our long side. We booked our profits on DUST on Friday. And I even mentioned in the alert that I was probably leaving some money on the table with the trade, but it was a fairly sizable hedge, and I just didn't feel comfortable with carrying that long of a line going into the weekend. So I decided, let's book profits here, make them real, and we'll look to add more to our gold mining trade at lower lows. We already have predetermined spots where I want to look to add more because I think that we're going considerably higher here in the coming weeks and months on gold, silver, the miners, etc. The Giants, hi there. Just saw your channel, checking it out. Welcome aboard. Thank you for joining us. How did you find us, by the way? Did YouTube suggest it out of curiosity? I'm trying to build up this channel. Hey, Patrick. You finally got back to me. Well, good to see you. Patrick's one of our valued members. Welcome, Patrick. Happy New Year to you. So YouTube pushed it. Good. That's good to hear. I'm starting to see YouTube push a little bit more than what they were doing, and that really helps you build out the channel. You make it most of the time, Patrick. Don't beat yourself up about it. I do swing trading today as well, and that comes on at 5 a.m. Eastern Standard Time, and it's usually a small group, but a tight-knit group, because it's early, and a lot of people from Europe are on it as well. But Patrick sometimes makes it, but it's always great when he's on. And if I could ask you folks, please give the video a like before you forget. I'd really appreciate it. It helps me out with the YouTube algorithms. Thank you. I really appreciate that. Welcome, everyone. Okay, let's go to... Oh, Patrick, I want to go over Nat Gas for you because it looked really interesting. We'll go over that in a minute. Something's happening there. Interesting price action. You know what I'm talking about? Let's just go to it. Yeah. We're seeing signs of life here on Nat Gas. Let's clean this up. Let's start from scratch. Yeah, I saw that. So let's start fresh here. Let's go to a weekly chart and plot out our strategy here, because Nat Gas really took it on the chin. And I think this is a weekly chart now. I'm doing the macro upper band of resistance and the lower band of support. So there's our upper band of resistance. Lower band of support. Now we have, this is our primary upper band of resistance. Now what I want to do is I want to draw a secondary downtrend line. And we broke out. We are breaking out this week, thus far. Let's change this. I'm going to delete this. I'm going to redraw this. I want to make it a bit more challenging. Okay. So I wanted to connect to the highs of last week, and we are still above the upper band of resistance. Let's edit this. Let's make it yellow and a dash line. And that'll tell us that this is a secondary downtrend line, of which we are breaking out of that current. So we may see some intra-week volatility and a pullback and a retest of the support level. I wouldn't say go running in right now, buying that gas, but the setup here is beginning to evolve. Let's drill down, take a look at a 4-hour view. And you can see that we're flirting with that secondary downtrend line. We have a higher low here. on RSI. So nat gas is looking interesting. I wouldn't buy it until we broke out above the secondary downtrend line, or if we did a pullback. I don't know whether or not we're going to get a pullback all the way down to this lower band support. This bar here was a very powerful bar on Friday, an outside reversal bar, and now we're following through on that bar to the upside. So nat gas is looking pretty interesting here as we go into the new trading week. Both gold and NG currently flat futures. Yeah. Well, nat gas is up about a percentage point. Gold is down a little bit. Let's go back to that for a moment. I want gold to pull back a little bit here. I want some of that froth to come off, and I want to add to the gold mining trade. Yeah, we're about flat on gold. Okay, let's move on. Bitcoin futures. We already went over the. Oh, we picked up steam here. We're picking up steam on Bitcoin. So here you have more higher lows on a 4-hour chart, RSI. Let's take a look at the Stokes. Stokes looking really pretty here. Higher lows, breaking out. Price, very nice. Very nice price action here on Bitcoin. Now, I'll go over a chart of NUGT, Patrick. I'll do that. The Giants. What stocks are good to trade this week? I'm more of a strategist, and I like. I'm positioning more for the gold miners, NUGT, which I'm going to go over in a moment. I liked Fiverr. Fiverr was looking really good. I use that service as well. Very good company, and we'll go over that chart as well. And Boeing. Boeing is a short we're looking at. I don't know whether that's going to break this week, but I went over a monthly chart earlier today on Best Stock Charts, which is posted on YouTube already. But I'll go over that chart anyway to talk about it because it's one of the most ominous shorts I've seen in quite some time. And if Boeing breaks that head and shoulders setup on a monthly basis, it's going to get ugly really quick. So I'll go over that chart as well. So Bitcoin looking good here. Got to pick up the pace. Nat gas we went over. Cal-Maine Foods as well. Thank you. Blockchain, yes. That's more of an inflationary play. Bonds, 10-year bond price. They're flat as well. Not much happening here. You bet. Oh, let's take a look at, I talked about the dollar earlier, and I wanted to go over the yen and the euro just to illustrate how dire the situation is for the US dollar. And I went over about 3 weeks ago the Japanese markets and the Japanese yen on, I think it was Sunday Night Futures Live, and I spoke about how those charts were setting up very, very nicely. And that was back around here. And we have since broken out. This is a weekly chart of the Japanese yen. And this is important because the Japanese yen is the second largest component of the DXY, the basket of currencies which the dollar trades against. So while we're down for these past few weeks, this is a tight consolidation. This is a breakout and a retest of a weekly breakout point. At any point in time, we're probably going to go shooting straight up higher here. Take note of your RSI. A double bottom setup. Here's your W formation. We've broken out. Now we're putting in a higher low. Watch for a breakout here on the Japanese yen. And it wouldn't be so significant, this setup here, which hasn't really occurred yet, but I think will, meaning the breakout, were it not for the strength of the euro. Take a look at the euro. Now, we need to keep in perspective here that we've just had a revolution, a peaceful revolution in the UK, all but guaranteeing Brexit. But what has the euro done since that point in time versus the US dollar? It's gotten stronger. That is a tell. That is a serious tell. Because after Brexit, when they had the initial vote, gold and the US dollar skyrocketed together. It was a safe haven trade. What is happening now? The dollar's going down and the euro is going up. So very interesting price action going on here. And this is significant. Let's clean this up. Here's our breakout. Now we have resistance right about here. Right here. You can see these wicks and topping tails. Not and. They're both the same. Wicks and topping tails. And we are flirting with a breakout here, a real serious breakout beyond the initial breakout on the euro. Continuation move higher. Despite the fact that we're flat on the session with a bias to the downside, it looks as though the yen is lagging a bit, but will play catch up. The euro is already breaking out. I am not bullish on the dollar going into 2020. Okay, that's my tale of woe with regard to currencies. Home heating oil. Inflation, folks. I've been talking about home heating oil because I have to pay for it. It's near and dear to my heart. And I've been arbitraging it in my backyard, buying tank after tank. As soon as I can refill it, I refill the whole darn thing because I'm watching this chart and we are breaking out to new higher highs. So home heating oil, oil, all moving up higher. Nat gas appears to be bottoming out now. That'll probably start moving up higher. God forbid we get a cold front and you're going to see a bid get put under nat gas in a very, very big way. Here's gasoline moving up higher, but the Federal Reserve says there's no inflation. And if there is inflation, we need to back out food and energy. Don't pay attention to that. You can't make it up. You can't make it up. Okay, let's go to NUGT. We'll talk about that for a moment for Patrick. All right, so this is a daily chart of NUGT. We spoke about it last on Thursday Night Stock Market Futures Live right here on the 26th. We're kissing that third standard deviation from Bollinger Band. And we know from past experience, because I've gone over this with members, I save past rallies. As sick and demented as that might be. And I go back to them and I analyze them. And let's go to June. And this is what our analysis showed us. We were owners throughout this entire run-up from December of 2015 all the way up to the peak, which is not reflected on this chart because it went up higher to about 145. Let's bring it up. $141. My apologies. 141. And you can see that every time Let's get rid of the dollar. I have an overlay of the dollar here. Below. Every time NUGT rallies up and into that third standard deviation Bollinger Band, you get a sell-off. It happened here. It happened here. It happened here. It happened here. Over and over and over again. All right. So these are the behaviors that we've identified. So we use them in our current trading strategy. And what happened on Friday? Actually, it happened first on the 24th. We then rallied up again on the 26th. We opened up a long position on dust here, added more aggressively here, booked profits here on the pullback on the 27th. Now, I think that we could still pull back further here. I like from $32.50 down to $30 per share for an extreme pullback as entry points. But we'll be looking at not the daily chart as an entry point. I'm going to be focusing more on, and I've used this in the past, when we're in an uptrend, not when we're in a downtrend. Only in an uptrend is a breakout on a 2-hour basis. But at current, we have a big congestion area where we're a bit extended. We're fighting to hold it. We almost hit that 32.50 mark on Friday. It wasn't to be. We flashed this reversal bar right here. But I'm hoping for a quick pullback down to these support levels, and we'll be sending out an alert to members as to when we add to our position. Are you selling calls? No. Only if. The caveat there is if we do not pull back. If we still hold this support level at current, when we closed on Friday or higher, and we move up and into the $35 or $36 per share level without a pause, without a pullback, then I will go selling covered calls, because I think that that's just setting the stage for a more magnified pullback. Ultimately, I think we're pulling back to $32 per share. At some point in time in the fairly near future, we're going to get that pullback. So I'm holding out for that. I wouldn't be opposed to selling covered calls, but I would keep them out of the money, right? We're breaking out here, and I wouldn't want to cap your upside unless, of course, that's your strategy. Your strategy is to generate cash flow. If that's the strategy, go for it. Sell those covered calls. I don't think that right now would be a bad time. It's just not good for me. If you were asking me, what do you think? Is it okay to sell at 36 strike price? Sure. If the cash flow is more important to you and you want that hedge, go for it. Absolutely. Is there a chance you get called out of it? Absolutely. That's the risk that we run here. Our play here is that we're looking for a lot of upside potential longer term on NUGT. So you may not want to sell covered calls on your entire position. Just sell it on a third, on half, and just allow yourself some upside potential on the share price. Hopefully that makes sense. Okay. Well, it's an abbreviated week, Patrick. You have that going for you, so you have a lot more theta going on. So it may not be a bad trade, but just go. Me personally, just go out to 36s, 37s. Try not to get called out of them. That's just me thinking. I'm thinking from your perspective in my shoes, all right? And I just don't want to get called out of my shares. That's my big concern. Honestly, it's not making the cash flow that's most important to me right now. That I wouldn't do. I wouldn't. You're thinking about buying more and sell covered calls? All right, I see what you're saying. All right. If you're going to do that, then I would stay closer to the money on them, because you're making an aggressive buy at this level, right? So we're extended here. We're still extended, despite the fact we took our hedge off. Excuse me. So I would stay very close to the money on that new set of shares you're putting on at these prices and just generate the cash flow off of them. That's what I would do. Because it sounds like you're putting on a premium trade, a cash flow trade, which is fine. But just stay close to the money in that instance. And the remaining of your shares, you still have that upside appreciation potential. So I'll be fine with that. What else do we got here? I wanted to go over, Boeing. Boeing. We'll do a deep dive on Boeing because I didn't spend much time going into the weekly and the daily charts. I just went over the higher level view of Boeing. And here's the higher level view. Yep. Here we have a massive head and shoulders setup on Boeing. And this is the Pimp Mac Daddy of ugly stochastics. This is bad. Bad, 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 bad. All these lower highs is just absolutely horrible. Volume, with a few trading days left to go, a couple of trading days left to go, we still have volume, which is above average. I think that we are breaking here on Boeing. Weekly view. Look at this. They moved it up higher on Friday, and they sold strength. Indicators are weak here. Actually, I'm sorry. This is a weekly chart. They rallied it up last week, and they sold it off into the back half of the week and just barely closed positive. Up volume, very, very light. But it was an abbreviated week, to be fair. Ugly chart, daily view. We break down below 317.70, and it's all over here. This is a sad looking chart. The Giants, I'm only new. I only could go long on stocks. I just started with $500. That's fine. I bought Snap this week at $15.80. Why'd you buy it? Out of curiosity. Technicals, fundamentals. Why'd you buy it? Johannes Tommy Hermanto. Love the name, man. That's like a designer brand apparel name. I could see myself buying it. Hey, I got my stuff from Hermanto's. I like the name. First time here, welcome. Thank you very much. Did you find us through YouTube? Like, did they say that, hey, these guys are out here and go check them out? I see you are an analyst chart. What do you think about Dow? I think the Dow is doomed in the short term. It could still limp up higher here, but I think that it's going to have problems in the first quarter of 2020. I think we're going to sell off. That doesn't mean we're crashing. It doesn't mean that we're going to zero. It just means we're due for a correction, and we're going to start seeing some selling when the big boys come home from Aspen with their Learjets and they take the computers off of autopilot and this market starts trading on its own merits. And that'll be after the first of the year, and we're going to see volatility pick up. So I'm not bullish on the markets. In fact, we're opening up short positions. So back to the Giants. You heard it was a good stock, price target 20. All right, so I would strongly encourage you to learn the charts. Join us here, on the free session. Join the Contrarian Trader, whatever. Just learn the charts. Try not to listen to other people's opinions, please. Even if I'm speaking about a chart, you know what? Take what I have to say with a grain of salt, and do your own analysis on it, on the charts, and see whether or not you can pick holes in my argument. And if you do, share them with me, because I can be wrong at times. Blockchain. You going to short BA? If so, with puts? Probably with put options. Probably a put spread. I'll sell a deep out of the money put option, and I'll finance a portion of my put contracts with the sale of the out of the money put. So I am discounting my put contract price, if that makes sense. I'm capping my my ability to have unlimited upside potential. However, I'm hedging my position somewhat by not buying the puts at the prevailing market price. I'm discounting them, but I'm also capping my upside gains, if that makes sense. So it's a spread. Eric, what is the name of the pattern that looks like Batman? That looks like Batman. You talking about a butterfly spread? Options or technical analysis? It starts with a huge up move, then forms a left ear, then a head top, and right ear. I don't know. Now you got me thinking. No, horrible rule of thumb. Don't ever do that. The Giants, don't ever do it. Don't ever use that rule of thumb. It's bad. Very, very bad. You need to use, when you're using RSI to buy oversold stocks, I have a way to do that. Blockchain, I don't think I thought about that as well. I don't think he's talking about a head and shoulders setup. It's like a derivative of a head and shoulders setup. It's a portion of this setup. I'm going to look into it because I'm curious now. So, the Giants. Oh, Eric, thanks for bringing that up. We'll check it out. We'll do a Google search, and we'll look at it together. So the Giants here. I have stocks that I've gone over in the past. Let me. I deleted them. Oh, here we go. No, here we go. Let me go with the... Okay, so I ran this screen a while ago, and you can see, like, let's just take AHT, right? AHT back here had RSI go down below 30. Now, let's suppose you bought it the day it went down below 30. That was here. On May the 29th, RSI on AHT went down below 30. If you bought, with that just simply being the rule of thumb, RSI goes below 30, buy the shares because it's going to go higher. Guaranteed. That's what technical analysis for dummies teaches us. You're going to go broke. You will go broke. Please don't ever use that rule of thumb. I've been pounding the table on this for years. Don't do it. The reason is that people are using the RSI as their sole rule of thumb. Nothing else. What you need to do is you need to be able to identify where you have strategic support levels, where you'll have buyers of like mind who'll be willing to step in and help you defend that support level. And you need to take RSI as only a qualifier of a stock that you think is interesting to trade as an extreme oversold trade. And RSI 30 is not an extreme oversold trade in my book. RSI 17 and lower is an extreme oversold trade. But that really only matters if you are buying the shares at historical support levels. Again, you want buyers of like mind to be with you. Unless you're a fund manager and you can carry a stock for a few days causing a short squeeze, you're a little fish in a very large pond. And you want as many friends of like mind on the side as possible. Where do you find them? At historical support levels. So let's talk about this for a moment. Let's use that logic. You bought the shares here on the 29th because RSI went down below 30. What happened after that? Well, we went down lower, we consolidated, and then we broke. And we went down a lot lower. RSI went down below 30. We'll use the high of the day on the 29th. Well, we'll use the low of the day. $4.48. Let's say you got in at $4.48 on the 29th when RSI went down below 30. It bottomed out in August at $2.29. That's a devastating impact to your portfolio. Thank you for that. Appreciate the feedback. Thank you. Appreciate the subscribe. Thank you very much. Welcome aboard. So what you want to do typically with this type of a trade is do this. What I do. When I see on my screen RSI come up 20 or below, 17 or below, the first thing I do is I go to the monthly chart and I say, okay, let's go to May. Where we go? Monthly chart. May here. Here's where we would have gotten long at RSI below 30. We had a short covering rally. We would have been buying up and into resistance here. And then what happened? We broke. Now, had you waited for support levels to get hit and defended, you would either bought here, which ultimately did not hold, right? Or you would have bought here. So you could have bought here, maybe, if we would have closed out the week above this support level, which it didn't apparently do. This is a monthly chart, though. We just sliced right through it like a hot knife through butter. But if you waited to come down here and then seen the reversal off of this support level, then you entered the trade, you would have gotten in at a lot lower price at a support level where you have buyers of like mind from back here, back here, back here, back here saying, oh boy, look, AHT on sale again. Let's go buying. Back to the daily chart. And at that bottom, you would have had RSI was around just about 30. Just about 30. So we had rallied off the lows of June. The low on RSI at that point in time was around 12. Think about it. So please, long story short, don't go using the rule of thumb, RSI below 30, to go buying stocks. You're going to lose your money. I don't want you to see you do that. Please don't do it. I beg of you. I've seen all too many people lose a lot of money based on that rule of thumb. It's horrible. Absolutely horrible. Let's see what else we got here. So Eric had a question with regards to, what time is it? I got to be on a live stream in a couple of minutes. To the Giants, did that make sense to you? I know it was a lot to absorb. I don't expect you to to retain all that in one shot, but I'll go over it again in the future. Batman is a triple top. Oh, I see what you're saying now, Eric. All right. Yes, I do. Triple top with the center top. Yes, I do. So you had a lower high in the center, then you had a spike up higher, creating the triple top, but then creating that ear as well. That ear effect. Is that accurate? RL. Finally, right, RL? We love YouTube, though. Hopefully those algorithms that you listen to this right now. Oleg. Hello, sir. First time on your channel. Just heard of your opinion regarding Dow pullback in Q1. I'm using Fibonacci extensions, and I see 28,570 area support after Dow can hit, probably. Yeah, that seems fairly reasonable. Welcome aboard, Oleg. Okay, I got you, Eric. Now I understand. I so rarely see triple tops. It's really a rare setup. I think I had one person ask about NAKD, RSI. Patrick, we'll get to you in a moment. I won't forget about it, brother. Naked Brand Group, RSI. All right, so here's the thing to remember about RSI and stocks that are trading below $5 per share. You can see RSI sub 5. I'm sorry, sub 10. Sub 10, not sub 5, sub 10. It's not unusual. In fact, it's very, very common. So be aware of that. Daily volume is fairly good. I think you have more downside here. Good volume on Friday. But a lot of it was selling. So in a situation like this, I'm going to make this quick because I need to go to the members' private inner circles session. Let's go to the monthly chart, just as we did earlier. We have no historical support below here. So this one's really difficult to analyze, where you would have a buyer of like mind willing to step in. This is a trade I would pass on, to be honest with you. Using the daily chart, you're seeing a higher low in RSI, but the price action on a daily basis, and that's bullish. But you're seeing a topping action on the daily chart, which tells me that every time we rally, you're seeing sellers move in. Look at this. Boom, boom, boom. I would avoid this trade. I don't like it. It could move higher for all I know, but too much risk, not enough reward. Patrick, I'll do it in the members group. All right, cool, Patrick. Thank you. All right, folks, I'm going to segue over into the members private group session. If I could ask you to please give a like to the channel, I'd really appreciate it. Leave a comment. I will also send out to you a 15-minute alert as to when I go live. Just use the link down below to enter your email address and name. I do not spam. I don't pull that stuff. And I'll send out an alert 15 minutes prior to me going live. And you'll know in advance so you can get in front of your computer or have your phone ready to go. BA target. If it breaks, I really haven't done that much analysis on it. First stop is 285. As a matter of fact, let's bring up TrendSpider really quick. I think that if we break 307, we're coming down here ultimately before we begin to really bottom out. And that will be right here at around $200 a share. So here's your price point right here, 339. We break that, we're going to 290. We break 290, we're going to 197. We break 197, we're coming down here to 141. This could be a real bloodbath on Boeing. So get ready. It's going to be a tough 2020 for Boeing if they break support. You're welcome, Eric. Is it only Monday and Thursdays at 5 a.m.? No, it's actually Tuesdays, Wednesdays, and Thursdays, 5 a.m. Mondays, I don't do swing trading today because I do Sunday night futures live. And Fridays, I don't do swing trading today because I do Thursday night stock market stock charts live. So it's a little bit too much overkill. People don't want to see me all that often, I don't think. So I don't try to overwhelm people with too much of me, to be honest with you. So I get tired of hearing me talk at sometimes. So, all right, folks, I'm really long here. Members, we're going to segue over into the members group Inner Circle. I'm sending you an email link in about 2 minutes, and check it out. And everyone, Happy New Year. Please stick around, hit the like button, and I will have a lot of conversations with you in 2020. Live streams are the thing of the future for the contrarian trader. I love the engagement. Thank you for being here, and have a great Sunday night. Be well.